So we're moving into the next panel, which will be for 25 minutes on NFTs, the new asset class. We've got Chana Kanzen, who is Rect Alice on Twitter, Asa Hutchinson, Harry Crabtree, and Ali Walji. Please welcome our speakers to the stage.
Got to get the Twitter name announced. Yeah. Okay, GM everyone. So we have, I think we'll start by introducing ourselves. So I'm Chana Kanzen, Rect Alice on Twitter. I am partner in Digital Wealth Fund, which is a DeFi fund. I'm also the founder of London Women Leading Web3, which is a group of C-level women, peer-to-peer network. We will also be investing, tokenizing, and structuring a DAO with the first registered legal entity as a women-only led DAO in the UK. I also work with Animoca brands with a company called TinyTap that is doing a new type of digital asset that I'm going to talk about in a minute, and do a bit of Web3 consultancy. So a lot of hats, as I think most of us have in the Web3 space. Asa?
Hi everyone. My name's Asa. I direct a VC, London-based Pluto Digital. I'm also another founding member of the LWLW3 DAO, which is, again, the female-led, London-based women in the space, C-level, people really just trying to find a nice environment for women to really work comfortably in. I also do a lot of consultancy and advisory for tokenomics and work very closely with a lot of the projects that I invest in. I have around 110 under my portfolio at the moment. So I'm cautiously, obviously not working with every single project, but a lot of the tokenomics that they've produced has come from my advice. So that's where I'm at. Not as many hats.
Hello everybody, I'm Harry. I run HTBC Consulting. We work with kind of NFT projects on growth, marketing, things of that ilk. I run Dyslexia DAO, which is kind of my passion project, helping people with dyslexia, and then do lots of other kind of NFT art-related events and fun, wear a few different hats. Not as many as the ladies beside me, I'm sure, but we have lots of fun.
Hi guys, I'm Ali. I'm co-founder at One.Media. We provide fractionalized co-founder services to newly raised tech founders. So what we've seen, a niche in the market, is that a lot of people will raise and they've never been a CEO before. So we come in and do the business development and the sales so they can focus on the tech. Thanks.
Great. So we're going to start off by asking, why do you feel that NFTs are a new digital asset class? Who wants to go first?
Okay.
You want to go first?
I just think they're fun. You know, they bring me back to my childhood. I used to collect football stickers, Pokemon, Tamagotchi, and I just think this is like the Pokemon 2.0.
I completely second that. I think that NFTs as a new sort of digital asset is giving so many people the space to really work on what they're looking to do with their particular asset. It means that you don't have to make a collection that's all exactly the same. It means that you can add various different types of utility dependent on what level people buy in at, what stage of the project people are entering at. It also gives you the ability to raise funds in a really, really cool decentralized way, a quicker way than what we're used to in the traditional world. And I think it really opens up the possibilities of really growing your project in terms of funding. Super quickly, super scalable, amazing.
Yeah, we've seen a lot of projects crowdfunding in a few minutes within the NFT ecosystem, as opposed to doing a crowdsourced funding. So that's been really interesting to watch.
People are literally making like 30 mil in like 30 seconds. Yeah. It's insane.
Yeah. Harry?
I suppose to take it from another angle as well is NFTs kind of exist as their own asset class, but they also kind of permeate into the traditional asset classes. So doing a bit of research before today's panel, kind of Googling what is an asset class. So what does that mean? So I was having a look, and it kind of splits into four common areas so far. So cash, bonds, stocks, and I can't remember the fourth one off the top of my head. But really the thing that interests me with NFTs and an asset class is its ability to kind of supercharge and technify the already traditional asset classes. They underpin the traditional ones as well as developing their own class. So there's a very interesting kind of ERC new token standard coming out, or it's recently come out, that's bonds. So obviously bonds are a very traditional asset class, usually quite low risk, backed by government. Now, with NFTs, you're able to classify that bond as an NFT and then trade it, sell it, and do all of the things that kind of NFTs allow you to do. So very interesting to see what happens next.
And I think it's been very interesting to see the infrastructure that's emerged over the past 12 months, really, in terms of trading NFTs. And that's really important, I think, going forward, is having the infrastructure and the tools for traders to benefit from this as an asset class. And obviously, there's a lot of complexities involved with that. What's interesting at the moment is just today, actually, it's a really, really great timing. I'm working with Animoca on a new type of NFT. It's called a publisher NFT. It's with a company called TinyTap. So TinyTap is a Web 2 educational company. It's a very successful Web 2 educational company. And their teachers create content, and they generate revenue from that content, which is shared between TinyTap, the company that's housing them, and the teacher. So it's this type of mini creator economy that's very similar to the NFT ecosystem, but with education. What Animoca did was they spotted that this was an area, the education sector is an area that needs really developing in the Web3 arena and blockchain. And they have housed some of these courses that are generating anywhere from 10 to 50K a year for teachers as a publisher NFT, which means that investors can buy that NFT, and they can generate revenue like a yield without it being a security. So how do they do that? So they co-publish the course. So they become co-publishers with the creator, with the teacher, which means that they are doing work involved. So they're not just owning the asset, but they're actually working the asset by publishing it. And they can, if they want, if you can't be bothered to publish the course, you can spend 5% of the capital there to TinyTap to market the course for you. And then that will generate a yield. So these NFTs are being sold for the amount that they are earning, so about 2 or 3x. So if a course is earning 50K, you can buy it for 150K. And then hold that as a generating yield asset long term, and it will generate anywhere from 20 to 50K a year as an almost like stable coin asset class in NFTs. So this is a new structure, and I think that's very exciting that we've seen a lot of investments in PFPs, right? But I think what's coming, there's a lot coming in the gaming sectors and the education sector and the music sectors in terms of generating revenue through NFTs. And I think that brings us on to some of the next question, which is like, what does the future look like for NFTs, and what do you perceive as challenges in terms of having NFTs as digital assets?
I mean, I think I'd like to see them being used for ticket sales, where the NFT is like easily transferred, but also as a memorabilia for after. And also, you know, I'm excited for soulbound tokens, because we want to see how the use cases will come about for especially like education.
I completely agree. I think that concert tickets are a really, really cool idea. And soulbound is obviously super successful in terms of keeping them bound. I definitely think that my energy with NFTs is going towards gaming. I think that there's so much use cases. I mean, I obviously run the fund, but the other half of the company is actually building a game at the moment called Resurgence. Now, Resurgence, in the roadmap there will be tokens, but the tokens aren't coming for a few years down the line. And the reason is because we're going to be using our gamers to really start enjoying the game, because it's a game. That's what we're trying to do. We're trying to get people in sort of in a freemium model, and they'll be able to monetize through NFTs. So there will be obviously elements of, you'll never have to pay anything because you were looking after us and building with us and our community since day one. So you'll have minted when, you know, the first drop ever came out, and you'll have been staking since then. Other people will want to come in at a later stage. Maybe they'll want to come in at a higher level, and then you'll be able to really monetize through an NFT in that sense. You've put a certain many hours into your gameplay. You want to sell that on and maybe start again because you think you really rock at the first 3 levels, and someone else doesn't want to do the first 3 levels, so they can just buy their way in. And I think that really utilizing NFTs in that sense for gamers it's just, I think, causing so much traction. It's definitely at the moment we've seen so much P2E coming and going that now we're monetizing with NFTs. It's going to really take a new turn, I think.
I think for me, the future of NFTs as an asset class, in the short term, kind of the things already discussed, kind of ticketing, I think, is a very, very easy use case to take on board. Gaming as well, mainly because the people that attend those type of events, especially in the tech sphere, are already quite technically able, or at least able to use kind of complex computer systems in an advanced way. I think what the real future holds is when those barriers to entry for the common man on the street, woman on the street are kind of taken down, and it becomes integrated into what you already do in your daily life. It's connected to your social media. It's done in your Apple Wallet rather than done in a secondary or third-party app. I think that just the barriers to people accessing them will decrease, and I think as that happens, the kind of niche use cases, memberships, kind of co-ownership DAOs. I always go back to 100 years ago as an example, when kind of boxing syndicates existed. There'd be 100 blokes that would kind of all chip in and all kind of experience in the kind of benefit of this fighter's journey and the money that they would generate. And I think that kind of model will permeate into a lot of kind of areas of life, both in kind of a profit-bearing centre and kind of more community or environmental or CSG way. I think those areas will just continue to flourish as time goes on.
I think it's very interesting. I mean, we were looking into whether we should open an NFT fund, and there's very few NFT actual funds. The reason being, and there are a few, not doing very well at the moment, but the reason we decided against it was multiple reasons. Number one, the main, I would say, revenue generation model at the moment is in art. Obviously, gaming is likely to overtake, because if you actually look at the statistics of the amount of wallets in the art ecosystem compared to the gaming, the active wallets are huge, but the revenue that's being generated at the moment is less. So a lot of the statistics that are coming through are misunderstood. So what we're seeing is that there's so much revenue generation coming from the art sector that people assume that is the main sector of the NFT ecosystem. But actually, if you look at the amount of activity that's in the gaming sector, it will overtake. It's just that the games take much longer to come to fruition, and the NFTs, the way that they're going along, the way the NFTs are fitting into that. I wanted to mention also the Starbucks project is an interesting one to look at. They're linking their reward scheme with Polygon. It's a really interesting model. I don't know yet whether the Starbucks users will realize that they're using NFTs, but that's a great way of adopting and watching how we can use NFTs as an asset for reward systems. So, having that reward mechanism and building the communities means that establishments can go direct to consumer, and that's very, very valuable for marketing. So you have an active community through your NFTs, and you can go, instead of paying a third party to market, or Google, right? You can go direct to your consumer, which is really valuable, and there's a lot of potential asset and revenue generation to come from that.
I was just going to say as well, I think that there's like a difference in market in terms of like an artist creating an NFT. They're very open to the idea of having their artwork turned into NFTs. It's really simple to kind of understand. You're like removing the intermediaries, you're putting your art out there for people to see, for people to love. You're also getting maybe a utility of getting the physical artwork as well by paying the premium. And it's really, really like the mass adoption of art is so much simpler, really, I guess, than if you look at gamers. A lot of the mass adoption is going to come from Web 2 gamers, and the Web 2 gamers are so hesitant. They hate it. They're like, what on earth does this mean? In fact, I was actually at a summit just last week where we kind of had this task to go through thinking about what would mass adoption, how could we make mass adoption appeal for NFTs in terms of Web 2 gamers? And one of the key things that came up were things like, the Ethereum name service. That would be a really cool way of keeping your name in a game and using that as an NFT. You'd own that. Someone's like worked their way up to the top in a couple of games, and they've got their name, and no one else can change it because they own that NFT. And I think that getting that into the Web 2 gamers' mindset is a little bit more difficult than having an NFT with art and saying to them, look, if you put it on the blockchain, you'll have no intermediaries. Hey, yes, definitely, I'm going to do that. Yeah. Whereas a gamer, it's like, this is so confusing. There's so many layers. I don't know how to get into that.
The other thing I want to mention is some of the challenges in terms of regulation, like from a fund perspective and from asset management perspective. The valuation of the NFTs are very tricky. So a lot of the NAV reporting and the valuations in terms of your, managing your assets are done through OpenSea, just tracking sales and floor prices. But really, the NFTs themselves have different rarities and traits. And so that hasn't quite been solved yet. Like, how do we actually value this rather than going on the last sale, and how do we monitor that? So there is still need for proper regulation and proper infrastructure to come in place when you're owning these as digital assets, especially in the more traditional finance point of view. Harry, did you want to?
Just to add to that, I suppose, as many of you will probably have read about in the last couple of months, Reddit did the biggest NFT drop kind of the world has seen. They didn't call it NFTs, and that's really quite telling of what's going to happen with quite a few brands, I would imagine, is NFTs really is just a name for a type of token. It doesn't describe what it actually does, it describes how it functions and where that piece of data is stored, which is on a blockchain. NFTs, in essence, are really just a technology to prove provenance, but it's composable provenance. So go back 200 or 300 years, you'd have a written deed that somebody would kind of collate and ensure that that was kept up to date. Now, that would be a person or a government or a set of people where you would have to ensure that whoever did that was the right person to do it. Whereas now, the kind of right person to do it is the blockchain. It's no longer a single entity anymore. It's the kind of the group, the mass. And I think that's just going to continue to increase, especially with kind of Reddit and Sweatcoin and their wallet on Near and having something like 3 million kind of active users within the space of a few months. It just demonstrates that the problems that the market currently faces are really to do with the volume and the kind of wider adoption rather than the actual fact of the market itself, because it's such a new market and so kind of unknown to many people.
I was just going to go over the Reddit thing as well, because what they did, I wasn't minting the asset that they dropped, but what I heard from a couple of my friends was that they actually didn't have any wallet integration with their mint, so you didn't necessarily have to do any of their seed phrasing, all of that stuff. And that's another key thing that we're building with our game, is that you won't be able to necessarily connect to wallet straight away. Of course, there will be that ability, but the people that don't really understand the wallet, it's not going to be shoved down their neck, like shoved down their throat. What it's going to be is, a few stages in, you'll be like, hey, you've got some NFTs here, they've been building up, why don't you try monetizing them? Why don't you try using them into the game and use your previous skills to nail this level as well? And I think what they did, Reddit, absolutely nailed it. So much mass adoption because people weren't worried about 12 separate words that meant absolutely nothing, making sure they'd written them down in various different places and making sure they remembered it forever and that piece of paper never got burnt. They've done it in a completely different way. It's so seamless, it's so easy. And of course people want to get involved because it's a new innovative blockchain thing that they've never heard of before.
It's true, the UX and UI is so important. I think Instagram just announced today that they've adopted NFTs on their platform, and I think that's a really exciting integration of the Web 2, Web 3 space, and that's how I think we're going to overcome. I don't know, we've just got about 5 minutes left. I don't know if anyone's got any questions in the audience. Any questions? Or we can carry on. Okay, so we were going to end off with challenges and successes. So just in your own personal portfolios, do you want to share a particular challenge or success that you've had?
This may be too honest. A success, buying 800 books for book games. That was probably one of my better investments, getting airdropped the book games tokens. And then a challenge, don't do collateralized debt against NFTs. It ends badly.
I think a challenge for me is to continue to keep the community engaged when teams are building, because people want updates daily, and this can be unrealistic, right? Because the team's out there building, so it's up to the community managers and the marketers to do their job right, and no successes.
I probably second that. Community is probably the biggest challenge, but also the biggest successor, right? Like if you've got a decent community and they're active and they love what you're building because you're open, you're transparent with your project, it can be the best thing that you've got to do with your project, with your game, whatever else you're building. Obviously all I talk about is gaming, but anything that you're building, if your community's active and love what you're doing, then it's just so successful. But it can have a complete flip. The challenge is making sure that you're delivering on time, making sure that you're nailing the roadmap, making sure that your roadmap is true. What you're promising to deliver is going to actually come. Even if it's, a month late, be transparent. We're a little bit late this month. Our building's a bit slow. Make sure that they're really seeing that what you're doing, you're grafting, something took a bit longer, but you're going to nail it even more now because it's taken a little bit longer. But I definitely think community is that balance of transparency, balance of making sure people are happy and accepting what you're building and really understanding that what you're building is going to have some longevity, and they were there from the beginning. That's like a really big... I'm proud to be a part of this project because I was a mass adopter right at the first ever hurdle.
I think for me, it's a combination of a lot of things. Like, if I'm focusing on the NFTs rather than crypto, because crypto, there's been a lot of challenges. There's been a lot of losses, like, for example, me keeping most of my portfolio in Celsius, which was painful. But in terms of NFTs, I think that the challenges there are definitely in terms of onboarding and again, the wallet structure and the community building and I think also the trust. So there's a lot of hype and the FOMO and the amount of times that, you FOMO into a project and you go to mint and then you realize afterwards that you should have just waited for them to go on to secondary and buy it for half the price. So we've all, I think, has anyone here made that mistake? I can seeing a few people nodding. Come on, let's be honest here, yeah.
Everyone gets FOMO,
yeah. We've all suffered from FOMO. I call FOMO JOMO now, like the joy of missing out. And I've taught myself, how to restrain myself when there's a mint. Because that's another thing that I plead a lot to NFT collections when they have a timed mint. So especially being in the UK when a lot of these are US based and my brother-in-law's here, DJ, knows that I've been up all night and seeing next morning is have you not slept? I'm like, no, there was a mint at 3 a.m. and then my page froze and then I didn't get them in and then I've lost out on a night's sleep because the community decided to launch this NFT at 3 a.m. So I think there's just a better way, better systems. I think we're seeing more and more projects that are allowing sort of 24 to 48 hours.
Do regional mints.
Yeah, just understanding the global nature of this and just better time management and mental well-being is important too, I think, yeah.
Yeah, it's been such a change from a year ago. I stayed up for 5 days to do the Gary V mint because he did a Dutch auction and it was 6 days delayed. So it's just bananas. The change that's kind of gone on in the metas of minting and just the last year is kind of been such an overturn from it being kind of so kind of secretive and in a club to just send us the money and we'll put it in a prepayment and you don't need to do anything. It's become normal.
You stayed up for 5 days to mint something.
Yeah.
Well, you did well out of it, but
1,700%.
Yeah, no.
Just to finish off, I think NFTs are definitely a digital asset here to stay. I think regulation is coming thick and fast, like we're seeing it with the crypto. We're a little bit behind in the NFT sector, but we do need regulation for it to become a recognized digital asset class. But it's exciting, and we are up for the challenge. So thank you very much, everybody, for listening.
Thank you very much, guys.